Are banks and insurance companies the exact same thing? Coming up next on The Banking Bros. What's up, everybody? It is The Banking Bros. Jadu and Jonah here at the Cash Compound, of course, helping you understand how to crack the code to cash flow. Jonah, I want to ask the question right here, right now.
Okay, go for it.
Are banks and insurance companies the same thing?
Man, wouldn't that be fun? It would ruin our whole episode if they were the same thing. Yeah, because you just answered, yeah, they're the same thing.
I mean,
episode over.
Oh, got it. Right. Okay. We do have to add the drama into this episode.
Of course, they are not the same thing, and we are going to walk you through the similarities today.
Yes.
And big differences.
Indeed. Those are the two things that we're going to help you understand. Of course, we're doing this because we want to help you understand how to save your money and spend theirs at maybe the bank and, of course, the insurance company. It's all about utilizing the tools that are in place from these big operations, tapping into those systems to grow your wealth and keep you cash flowing whatever you want to do in life. And we're going to do that today through, once again, what we like to call the infinite banking concept, as coined and developed by R. Nelson Nash, the author of Becoming Your Own Banker and several other great books, to help you understand what's going on.
You're reading one of his other great books currently?
I just got it from you. I got it off your shelf. Right. I haven't dived in yet, but I don't think I've actually gotten to The Case for IBC.
Okay, but that's by R. Nelson Nash as well?
Yes, and some of his other partners that are down there at the Nelson Nash Institute, Carlos, and the other guy.
Ooh, you put me on the spot.
Robert something.
Okay.
It's Robert something. Cool. And, of course, we've read his second book that's just Nelson by himself. And that one is Your Warehouse of Wealth, The Warehouse of Wealth as well. But, yeah, okay, so let's jump back into it. So let's talk about banks. Jonah, the reason I'm talking about this specifically is because I jumped onto our lives on some of our social platforms like TikTok, and I was helping people understand not just the product of whole life insurance from mutual companies, but how to use it. And of course, the process is banking. That's the verb that always comes up, probably confuses people.
So I actually posed a question on one of my videos that I did on our social channel. So if you're not following us there yet and you want to, that's The Cash Compound on Instagram, on Facebook, on YouTube, on TikTok. And also on TikTok, we've got two handles. One of them is called The Banking Bros, and you can follow us there. But anyway, I posed this question to all of our followers, right? How many followers are we up to?
77,000.
Cool. All of our followers, and I posed the question, and here's how I prefaced this video. I said, listen, I don't know what you do for work at all, and I'm talking to you at home as well. I don't know, but here's what I do know. I know that every time that you get paid, you put your money in the bank. Is that true?
Yes, or someone else puts your money in the bank.
I agree. So I'm not picking on anybody when I say that. Almost everybody works like that.
Yep.
I do it, you do it, your family, your friends, my family, my friends. You have to do it almost in 2022. It's really hard to shop on Amazon without a debit card.
Correct. You got to be able to swipe that card, and 90% of your places
on Amazon without a debit card, let me know how you're doing that. I've never even heard of that. Right? Got to have one. Right?
Yep.
Okay, cool. So everybody's money goes to the bank. So the question that we posed on the internet was, if everyone's money goes to the bank, well, then how much money does the bank have?
It has a lot of money.
A lot of money. Now, clarifying question, but how much of that money actually belongs to them?
A little is how we termed it on the gram,
right? Because if it's my money, if it's my paycheck, my direct deposit, and I put it into the bank, that doesn't make it the bank's money.
Correct. It's under your name. You can take it all out if you'd like and withdraw it.
It's my money.
It's your money.
They're holding it, right?
Yes.
Since they're holding it, they like to use it. So then I asked this question. I said, now I don't know what bank you use either, but if we were to type it into Google, how much money did this bank make last year? Whatever bank it is that you like to use, substitute your bank in there. What number would pop up on Google?
A very large number.
A very large number. So then the question at hand is, how? How did the bank go from, we hold everyone's money, it's not ours, to, we make quadrillions, right? It's like millions or billions of dollars.
Oh, yeah, for sure.
At the end of the year.
Well, it's funny because one of the banks, a very popular bank that we've all heard of, I think it's nationwide in Canada, TD Bank, America's most convenient bank. They're talking about, they're talking about, you used to work for them.
I did. Back when?
they're talking about being convenient to the customer. We have all these services. We've got all this online.
Hour later.
Yes, you can get to all these different features and stuff like that. It's all about you. Meanwhile, who made all the money?
They did. A lot of it.
How much money did they give you?
So I actually Googled this.
Okay.
So I said this to someone recently on the phone. They said, they answered all the questions. Oh, yeah, the bank has lots of money. Oh, not very much of it is actually theirs. Then I said, how much money they make at the last year? And they said, I bet a bunch, but I'm actually really interested to know how much it actually was.
Okay.
So I said, oh, well, I mean, I didn't actually ask you what bank you use, but what bank you're using, we'll just Google it, right? I mean, these are publicly known values.
Yeah.
If you Google it, they'll tell you, right?
Yeah.
So they were using a bank. So it's just a big, huge bank, Wells Fargo. That's just the bank they're using. So I actually did Google it and pull it up.
Okay.
So just in case you're wondering, last year alone, this is 2021, 82.4 billion Wells Fargo. So what Google told me, I typed in Wells Fargo annual revenue 2021. Big number popped up, 82.40 billion, and it says they were up 2% from 2020.
Blessings.
How
Blessings.
They doing? That'd be real nice.
Great, because now. Okay, so the question is, well, how in the world is the bank making money?
Yeah.
What's really going on? Because they're holding your money. You're making $2.03, right, in interest or whatever.
If that.
Yeah, over the course of your year.
They're making billions, so what are they doing? What's the key to success? Right? And I've heard lots of answers. We got lots of good feedback on our social post. And of course, the answer that we want to pinpoint and hone in on are loans. Lending, financing, whatever you want to call it. Banks are very, very good at loans.
That is their main business.
You want to know how good banks are at loans? Watch this. You ready?
Okay.
We didn't rehearse this at all. I'm about to ask you a few questions. I just want your opinion on what the answers would be. Okay?
Got you.
If I asked you what is the average length of time on a banknote for a house, like a mortgage, like how long, what's the average mortgage?
30 years.
Okay. What about interest rate? What interest rate are you looking for? What are they giving out these days? What's average?
3,
4, 5, right? Whatever the answer is. Do you realize those two things you just said are how good banks are at making money? When you pay them for that 3% for 30 years, they make thousands of dollars, right? On whatever your
hundreds
mortgage
of
is.
thousands.
You didn't have to call them and ask them what they're charging. You knew. They're so good at making money that we know how much we have to pay them to do that deal without asking them. That's how crazy is it when you really think about it, right? Because it's like, if I asked you the same thing for a car or a credit card or whatever, you'd spit out numbers. We know the bank is so good at making money that we know those answers before we even ask them.
Right.
That's nuts, right?
Right.
And of course, the equation is loans, like we just said, but it's because when they loan out money, it's always the depositor's money, the money that they were holding. And then they always make you pay that money back with interest.
So you're giving them back their money and you're giving them back a bunch of your money.
That's right.
Your future value, your future earnings, the work you haven't done yet. You've already promised portions of that to other people. Really wild when you think about that.
Yeah.
Now, of course, let's turn the tables real quick. Is that possible, or how can you make that work in your advantage using an insurance company? And of course, ladies and gentlemen, if you're not aware, you can. That's what we're here to help you understand. So that may be news for you right here. We're just dropping it on you. And the beat is telling you, boom, you can actually perform that function in your own life. And you can be the banker, the one who's able to control the situation, earn all the money, and become wealthy.
Yeah, absolutely. And so what I would generally say to that is, well, if we're going to be the banker, we should probably just copy what they're doing, right?
Let's do it. Comment of the week. Here they are. All right, I got a couple, Jonah, on TikTok while I was going live this past weekend. If you're not following, I went live like 4 times at random times. Didn't even let anybody. I was learning, right? We're learning how to use these crazy platforms. So let me just go live and see how I do. We got God Complex K. We got another one here.
Are these usernames?
Yeah.
Oh, gotcha. Okay. I didn't know what you were saying.
Emo Monkey 20.
Okay.
We got Videsh 117. But here's the basic idea. I'll read all three. Okay. This person says, I'm 99% sure my bank does a few other services besides just hold mine and others' income. That is correct. They loan that out. They don't just hold the income. You got it.
Right.
Okay. Here's Emo Monkey. They are in business first and foremost. Interest. Okay. So that they're loaning it out and earning interest, obviously.
Yep.
And then Videsh. Banks make money by lending your savings to others for an interest.
That is correct.
There you have it.
Sometimes I break it down for people very, very simply, and I just ask them realistic, simple questions, right? If you do put your deposit into the bank, right, why are you doing that? And people normally answer with the same 2 or 3 answers, right? They say, well, that way I don't have to sleep on it in my mattress, right? That way I can get to it via plastic. We talked about earlier, the debit
convenience,
and
services like bill pay, right?
Bill
How do I pay my bills?
Like that.
Yeah.
I mean, that's what it is. That's why I'd give it to you.
Yeah.
And we used to be for interest. They don't really do that very much anymore.
Right.
But I mean, I agree with that. I mean, I shop on Amazon like everybody else. I need the card to do it, right?
Yeah.
And I also say things like this. Well, if the bank just holds your money, waits around for you to come back and get it slowly, $10 at a time as you swipe, right? How much money does the bank make then?
Nothing.
How would they pay their employees? How would they afford the buildings? How would they pay the light bill? They can't. They have to go make money. And what are the resources that the bank has in order to make money?
Loans.
Literal dollars.
People.
That's what they use to go make.
Now, when you
money.
make $82 billion, Wells Fargo, then they can invest. Some people say invest, but it's like, no, they don't invest your money. They have to be able to liquidate it and keep it moving.
Right.
When they make their money,
then they go do other stuff.
Then they can go do other things. Build more branches.
Principal, whatever I want to say. Primary function is just loans, financing.
It's a big deal. So Nelson Nash said, let's talk about insurance companies and help people understand that what an insurance company is doing and how you can tap into that resource and become the bank. It's really crazy. As he said, an executive vice president at an insurance company and an executive vice president at a bank could switch jobs back and forth, and they wouldn't be able to tell the difference, and you definitely wouldn't be able to tell the difference. And the reason for that is because insurance companies get a bunch of deposits, premiums from people, and they have to go make the money work. Yep. The reason for that is, of course, insurance companies have to pay out claims. Okay, we specifically hone in on whole life insurance, so that's a guaranteed product. So they have to pay out claims. You have to die.
Yep.
But there's obviously 100 different types of insurances that you can get from an insurance company.
Sure.
But we're talking about now you, Jonah, using the money and using their system and using that entity to be able to build a wealth machine like the bank. How do we get $82 billion then personally by using an insurance company?
Well, I don't know if it'll be 82 billion, right? But you can earn money just like the bank earns money by copying them.
Okay.
So realistically, I mean, maybe we should just walk through a loan and see how lucrative it is for the bank.
Oh, sure. Let's do it.
So cool. So I'll just make this scenario up, okay? But gas is a little crazy right now, right?
Yeah.
So let's just say that you're in the market for a new car and you're going electric because gas is crazy. So you want to go get a loan, right?
Okay.
From a bank. So let's say you need 50 grand to go get your new car.
Get one of them Teslas.
Sure. All right. So here's the thing. You can get the car in cash if you wanted, or you can loan, or you can finance, or you can lease.
All right. So I need 50 grand.
Right.
Okay.
So you could do those things. You've decided you want to use the bank's money. Okay.
Yeah. So I have let's say I've even put money in the bank. I could take it out. That's the idea.
Yeah, sure.
But I don't want to do that. I want to have that ready for these gas prices.
Sure. So here's what happens.
For my wife's
You
car.
walk into the bank, you say, banker, I need a car loan. I'm really interested in 50 grand. They approve you.
Okay.
That means they're going to send 50 grand to Tesla or to Carvana, whoever you're going to use to go get the car, right?
Yep.
So the question is, whose 50 grand is the bank sending over there?
Okay. They're not sending mine if I'm not withdrawing.
Right.
Okay. So if I'm borrowing money from them, it's other depositors' money.
It's other depositors. That's key. Meaning it's not the bank's money. The bank's holding everybody else's. We got
Correct.
Right, Friday's payday. The bank gets millions of dollars each Friday, right?
Yep.
And then they give some of that to your expense to go get that car. They
Right.
send it to Tesla on your behalf.
Now, of course, many of you are probably thinking, the savvy listeners are thinking about fractional banking. That's not the main point here, but
Yeah.
they are loaning out money based on the depositor's money.
Exactly.
Okay.
Right. So then you're happy because you're going to go get your car. But
Yep.
before you
Okay.
leave the bank, you've
Oh.
got to sign a bunch of papers.
Yep.
And the papers say, well, here's my summary of the papers. Thanks, bank, for the money. I will pay you back that money, and I will pay you back interest. How's my summary?
Pretty good. I'm going to give you back all 50 of the money I borrowed from you guys, and I'll give you back a bunch of my money
Extra.
extra.
Right. So here's
Yep.
what's key. I did not actually mention an interest rate. You realize that?
Yes.
Here's why I didn't mention interest rate, because it doesn't matter to the bank. Right? Think this through. Whether I said 1% on your car or 10% on your car, my summary remained true.
It's true.
I have to give you back all 50, plus I have to give you back extra, right?
Yeah.
Think this through. What if me and you go to the same bank to get the same car note, to get the same loan, to get the same Tesla from the same dealership? Did we walk out of the bank with the same terms?
No, maybe not.
No, maybe not, right?
Yeah.
So how does that make any sense? Well, it's because the bank is the one who gave the note out. And like I just mentioned, they don't care about interest. See, the bank will loan to somebody maybe with great credit at a great rate, and then they'll turn around and loan to the next guy with not great credit with not a great rate, right? Only the consumer cares about the rate. The bank says the summary must remain true. You will give me all the money back. You will give me back extra. They'll loan. Now think about it. If Jeff Bezos, Amazon guy, walks into the bank, asks for the same loan that we asked for the same Tesla, does he get the loan?
Yeah.
Yeah, he's Jeff Bezos. Why wouldn't you give him the loan? He probably got the best rate you've ever seen, right?
Right.
0.0001, right?
Right.
But at the end of the loan, did he pay them back more than 50?
Yes.
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 See, the bank just has to make sure the summary remains true. So then we're happy. We get our car. We're driving it. But every month now we have payments, right?
Yep.
So we pay in April and May and June and July and August. We pay early. In September we pay late. And 3 years go by and 5 years go by, 7, whatever it might be. We finally pay the car off. So the question then at hand is: did you give the bank back 50 or did you give them back more than 50?
More than 50.
Can we call it 55? Just for example. Okay,
Sure.
cool. So they gave you 50. You gave them back 55. So who made money? You
Bank.
or the bank.
The bank.
The bank did. How much did they make on one car?
5 on that one.
But here's what's important. Yes, they made 5, but they also got the original $50,000 back. You didn't just give them $5,000, you gave them $55,000. So they made $5,000, got the original principal back. They could turn around and loan the same $50,000 that they gave to you. They
Right
could
back
loan
out.
it to me for my car. And maybe my credit's worse than yours, or I just bought a house or whatever else they make up over there, right? Because they're in charge. They make the rules.
They got the money.
They got the money, so maybe they charge me more. So I don't give them back 5,000. I give them back 10. They made 5 from you. They made 10 from me. They've made 15. They used the same 50,
And they still have it again.
and they still have it again.
Yeah.
How's the bank doing on one loan?
Really great. Because that's right. That's like, we're saying that's even based on one depositor.
Exactly.
Like
Right.
they keep getting the money back, recouping it and loaning it out
And the question
over
at
and
hand
over and
is,
over
how
again.
many loans has
Love
your
it.
favorite bank done today already?
1,000.
And this week and this month, right?
Yeah.
That's all it is, loans. But there are 2 things that have to remain true on every loan. The first is you got to loan out someone else's. It's not yours originally. You might be holding it. It just doesn't make it yours if you're holding it. And the second is whoever got the loan has to pay it all back plus extra. Doesn't matter if it's a little extra or a lot extra. Now, granted, you might want a lot extra, but it's always got to be extra. That's what's key. And by doing that, banks make millions of dollars. And that's again,
Billions.
even before we talk about the fractional banking. Where
Yes,
they
which
can
is a whole
loan
nother
out
thing.
So much more than they even got on hand, right?
Yes. They're
Nuts.
loaning out not real dollars because they're loaning out plastic and they
Right.
can make up the dollars.
One thing that I thought was super interesting is actually earlier this morning we were talking with a gentleman that was interested in getting started with us, right?
Yeah.
And
Oh,
we gave him some
came by.
differences between the insurance company and the bank. And one of the differences that kind of stuck out to me that we haven't actually talked about much is how banks, like we just mentioned, can loan out money that doesn't exist, just zeros on a computer screen. Insurance companies, however, have to have the money on hand. That's a huge difference. What that means is insurance companies can back what they're saying with actual dollars, right? Saying, if you want to get this policy, we'll guarantee this. We'll give your family a big chunk of change if something ever happens to you. And we're backing that by money that's sitting at the home office.
Literally, we got.
Yeah.
It's sitting in the basement in the vault. We have to be able to pay out on claims, right? So that's the whole point of insurance companies. So, ladies and gentlemen, once again, you've probably realized that the borrower is servant to the lender. And what we're trying to help you understand is the banking concept with a bank. All right. If you can understand it with a bank, you can understand how lucrative it is to pull in those crazy revenues. Now, can we do this with an insurance policy? Yes, that's what's really crazy. Yeah. So we're not actually doing, and what's really crazy, Jonah, I'll tell you about this. So I was going live a couple of times, and a few people wanted to try to tell me something like, this is not possible, or they say the word scam, and you don't know exactly which last sentence they might be referring to. Sure. But what I keep trying to help them,
in the video,
correct,
one thing, yeah, I'm with you.
But I'm trying to help them understand that this is a process that happens all around them all the time. And when we give dollars into an insurance company, they have to put money to work because they have to pay out future claims that are higher than what you gave them.
Yep.
So you give them, how much you pay in car insurance per month?
$120 or something.
All right. We got 120 right here.
Yep.
Okay. So 120 some odd dollars here. Got a couple of cars, right? So you pay that into the insurance company. Yep. Now, if you wreck your car, what is one of your cars worth?
50,000.
50 grand. So they got to have that money working for them. And how they do that is they keep the money moving.
Right.
It can't sit there.
They would never be able to, that's not a business model that you can sustain for 10 years. Right?
So, I mean, first off, folks have got to be reminded about what they're already doing and how they're participating. You give the insurance company $1 for your car insurance, they have to be ready to pay $100 or $1,000 out for the value of your car. So one of the ways that they do that is they keep the money moving, and you, in a whole life insurance scenario, have access to the equity value, the cash value of the money they have guaranteed to be able to pay out.
Absolutely.
It's not that hard.
Right.
To understand if someone can simplify it for you.
The crazy part about it, right? When we walk through a bank example, it's like everyone in the world relates to that easily. They go, "Yeah, that's how banks work." Like
we get it.
Like there's no other options.
We get trolls even say, like, when we say those things on TikToks or videos, and they're like, "Yeah, what's the point of this video?" Yeah, like, I don't even understand.
Exactly. But what they're not realizing is all that, again, we can simplify so often and they still not getting it, right? It's like all that happened was they had access to other people's money because they're offering convenience and whatever else. So then now they've got access to so much. They loan it out. They make you pay it back plus interest. That's all that happened. They're very good at it. Yep. They've done it 1,000,000 times, but that's it.
And that's where everyone goes to get money.
Yeah, and then it's like
keep coming to them.
Everyone you know does that.
Yeah.
It goes to them to get the money, and then it's like all we're introducing is, hey, with this policy, you can have access to other people's money. I mean, that's it. And then process what you should do with that other money. Is loan it out and get other people to pay it back.
Or
extra.
Or even if you have future. Yes, what's crazy about this is even if you didn't loan it out. Now, Nelson Nash talks specifically about this. Loan it out to other people. Go do business with it. Grocery store example and all that. But even if you don't loan it out to other people and you use your future money and your future income to pay your own self back, then who makes all the revenues?
Exactly.
You do.
It's so funny to me that they'll go, yeah, banks work like that. Yeah, they use other people's money. Yeah, we pay them back with interest. Oh, I've done that 100 times. Oh, I only get 1% interest rates. Sometimes I give them examples and I go, we put 50,000 in for your car, right? You pay them back 55. Is that cool? 5% or whatever, 10%? And they go, nah, I don't do that. I only do 2. Like you missed it, man. It's not about it's just the fact that you have to give them extra, right?
Yeah.
And then it's just, you can do it here. Because there's other people's money at access, and they go, "Nah, can't do that."
Right?
Like, what do you mean?
You just
totally can.
Yes, you've got to remember who the actors are in the play, and if you are able to play multiple roles, and you're using the right infrastructure, which is whole life from a mutual company that pays dividends, if you using that for its accessibility of the cash, paying it back in future work or opportunity from you to them, it goes back to your system.
Right.
And you make all those revenues. That's it.
That's the way it works.
Ladies and gentlemen, that's all we have to say today is become your own banking system. Do it yourself and reap the benefits and rewards over years and years, aka a whole lifetime of being able to recapture, recycle, and reuse your money.
That's it. Before we leave, give a big shout out to Ruby Lapel. Thanks for following us. We see you out there. We appreciate it. We see that follow on YouTube. Please watch, comment, like, do whatever you need to do to let us know your questions or concerns. We want to chat with you. We seriously do. Give us a call if you haven't already. We'll be happy to answer your personalized questions, help you get started if that's what you want. And until next time, we'll see you.